This is an urgent update. I was gonna record another video today, but as soon as I saw the numbers, I thought I should put it out there because these are the things that many experts don't talk about. One of the biggest drops in sales and what is to expect for the rest of 2025. In this video, I will take you through one of the biggest drops in the number of sales in Toronto, and then I will talk about who's gaining and who's struggling in this market. Then I will tell you about the detached homes and condo market, and I'll talk about my famous indicator, death cross, that keeps getting confirmed month after month. Finally, I'll answer the most asked questions. What can be done in this market and what should you expect for the rest of the year? For those of you who don't know me, I run one of the top real estate groups in Toronto. You may also have seen me on global news discussing the real estate market as well. If at any part of this video you think you have questions about the real estate market in your area, use the link down below to book a discovery call with myself or my team. Finally, in order to help us provide you with more contents like this, make sure to subscribe to the channel and like the video. As we break down the February's numbers, we'll look at the key trends shaping Toronto real estate and the factors influencing the buyers and sellers behavior, and most importantly, what to expect for the remainder of 2025. Let's start from my favorite charts. This is one of my favorite charts. As you can see in this chart, the most number of sales were happening between $500,000 to $700,000, which were mostly condos. If you click on this, you're gonna see that mostly like 95%, 96% of them were condos. In this price bracket, 90%, 89% to be exact, of them were condos. And the next highest sale bracket was between $1 million to $1.25 million, which, as you can see, 50% of the sales in this price category were detached homes and 21% were semi-detached homes, and the condos in this price category were about 15%. The next highest sold were in $1.25 to $1.5 million price bracket, which, as you can see, the majority of it is slightly more than 53% were freehold detached homes, and 25%, almost 25% of that were freehold semi-detached homes. And condo apartments in that category were under 12%. Now let's take a look at the high-level numbers. As you can see here, Toronto Real Estate Board for February 2025 revealed a notable drop in the sales volume while the inventory levels continue to decline. So these are the key market stats. Total home sales were 4,037 homes, which is a 27.4% drop from February last year. New listings were 12,066, which has an increase of 5.4% from last year. Active listings were 19,536, reflecting a surge in available homes. And the most important number is the average home price, which was $1,084,000, which was 2.2% down compared to last year. Also, MLS Home Price Index, or HPI, which is a composite benchmark, was 1.8% lower year over year. So all these numbers indicate a bad start of the year. These numbers indicate that the home buyers currently hold the upper hand, benefiting more from negotiating power due to increase in the inventory. So now let's talk about why the sales are dropping. So several factors contributed to the drop in the sales. The first one is the higher borrowing costs. While the mortgage rates have slightly decreased, they still remain high enough to keep some home buyers on the sideline. The second one is the economic uncertainty. Toronto Real Estate Board pointed out that concerns over Canada's trade relations with the United States have impacted consumers' confidence. And the third one is affordability challenges. The cost of living and stagnant wage growth continue to challenge the first-time home buyers, which were majority of home buyers in the past couple of years. The fourth one was buyers taking a wait-and-see approach. Many expect interest rates to drop further in 2025, so that's making some of the home buyers hesitant to commit to a purchase right now. I have a video in my channel that I explain the 7 factors that drive the real estate market. I'll put the link at the end of this video as well. Before telling you about who's gaining and who's struggling in this market, I'm going to show you one more chart. If you go to my website, you can see that in this part, you can see the number of sales for all homes. As you can see, the number of sales in February was slightly higher than 4,000 sales. And if you go back, even during the COVID, we didn't have this number of sales, basically this low number of sales in any given February. You can go through the numbers by yourself. I'm not gonna take you through that, but it's pretty simple. You go to my website, click on the real estate blog, you go to the market section and choose any chart that you like. And it's interactive, so you can choose the period of time that you're looking at and go look at the data. Now let's talk about who's gaining and who's struggling. I'm gonna start with detached detached homes. Detached homes are holding firm. Detached homes remain a strong part of the market with demand relatively stable in key areas. Let's look at the numbers and it's going to surprise you. The average detached home in the 416 area, which is Toronto proper, has been $1.78 million. The average price of a detached home in the GTA was $1.44 million. In 905 area, the average price of a detached home was $1.4 million. And interestingly, the detached homes in Toronto gained 7.6% year over year, which is very interesting in the current market, while the sales number of detached homes has dropped by 27%. So the detached home sales in the Toronto proper 416 area dropped by 27%, yet the detached homes gained 7.6%. In the 905 area, the story is different. 905 area, the price of the homes declined or lost value by 3%. Detached homes lost value by 3% in 905 area, which is around Toronto, yet the number of sales declined by 32%. This is a totally different story. So Toronto proper has a stronger detached house market, while the areas around Toronto are hurting, even though the detached is a popular product out there in the current market. So overall, the average GTA market has seen a slight increase, which basically I can tell you the heavy lifting is being done by Toronto detached homes, not the 905 detached homes. So now let's talk about the condo market. The condo market has been basically seeing a lot of pressure in the past couple of years. So basically it was a buyer's market. And now we are going to take a look at the numbers. Again, 905 and 416 and the average GTA. The average price of a condo in GTA has been $688,000, which had a decline of 1.3%. So basically condos lost value of 1.3% year over year. However, when you look at the 416 area, which is Toronto proper, you see that the price depreciation was almost close to zero. It was 0.5% price depreciation year over year. So Toronto condos were basically holding that price stronger than the 905 areas. In the 905, you can see the condos lost value 4.7% year over year. The number of sales also were lower. When you look at the 905 areas, the number of sales were lower by 30%. And the city of Toronto 416 area, the number of sales dropped only by 17%. So when you compare it to 905, it's like almost half of the basically sales drop. So as you can see, with higher inventory levels and developers slowing down new condo projects, buyers found themselves in a position to negotiate better deals. Just so you know, the month of inventory was 6.2 months of inventory in the condo market, which is pretty basically buyer's market. Semi-detached and townhouses also had a mixed performance in some areas. Townhouses gained price appreciation in some areas. Semis and townhouses lost value year over year. So it was a mixed market when you're looking at townhouses and semi-detached homes. Now we are going to take a look at the economic factors shaping Toronto's housing market. Beyond the real estate stats, external economic forces are playing a significant role in the market performance. Number one is interest rates and mortgage costs. As we talked about it earlier, I'm not going to talk about it that much. We just know that lower mortgage rates could stimulate demand later in the year, especially for the first-time home buyers who are currently priced out of the market. The second one was inflation and cost of living. So rising food, energy, and consumer goods and cost prices continue to affect household budgets. So higher expenses limit the ability for home buyers, especially first-time homebuyers, to save for down payments. So that's going to slow down the new buyer entry to the market. The third one is employment and economic confidence. So the higher unemployment rate, the less buyers coming to the market. While job growth is strong, a rising unemployment rate signals caution in the labor market, which could impact the housing demand towards the end of 2025. So let's go to the predictions for the rest of 2025 and what to expect. Looking ahead, the Toronto real estate market is expected to experience a gradual shift, in my opinion, with demand increasing in the latter half of the year. So I expect demand increasing in Q3 and to Q4 of second half of 2025. And another thing that might happen is that spring and summer will see a gradual uptick. So buyers who delayed in early 2025 will likely enter the market in Q2 or Q3 of 2025. Another thing is that everything that's with the uncertainty that's happening, expect, again, this is my personal opinion, may happen or it may not, but I expect interest rates cuts coming somewhere around mid-year. That will improve the affordability. About the home price appreciation, I think detached homes may see moderate price growth this year, while condos would continue stabilizing the prices, and I don't think a rebound happening in the condo market before 2026 or even 2027. So all in all, the price growth will be slow but steady. Detached homes, as I talked about, could see a price increase somewhere between 3 to 5%. Again, it depends how the second half of the year goes, but so far it looks like that we may see price increase in the detached homes somewhere between 3 to 5% by the end of the year. And in condos, as I mentioned, I would say the prices remain flat or see a minor decline, with the recovery expected later in 2026 or 2027. For the properties above $2 million, I would say the demand will stay soft due to the borrowing cost. The third thing that could be a prediction, the immigration and population growth, in my opinion, will keep fueling the demand. So Canada's immigration targets still remain high, with many of those immigrants settling in the GTA. So new arrivals will first enter the rental market, but long-term demand for ownership will still remain strong in the long term, of course, not like, let's say, next 4 or 5 months. And the fourth thing I would predict is that the new housing construction is slowing. So that would affect the supply and inventory trends. So new housing, basic construction is slowing down, meaning that it's going to lead to a potential supply crunch by 2027. Let's say, for example, 2027 or 8. And developers, I've seen and I've heard of developers pivoting to rental projects. That also could limit the future condo availability as well. So my final thoughts, 2025 will be a year of opportunities. The Toronto real estate market in 2025 presents challenges but also opportunities as well. So for buyers, now is a good time to negotiate a good deal, especially if you're looking at the condo market. Detached home buyers could face some competition, as we have seen that in the detached homes while we are working with our clients. Sometimes some detached homes in desirable neighborhoods, they get up to 9 to 10 offers. I'm going to show you in another video which is supposed to record with my business partner Mark, so I'm not going to spoil that one, but I'm just giving you a hint in this video. So expect, even though that the detached home buyers might face some competition, they also can expect more choices that would help them to find better suits. So now for sellers, detached home sellers are in higher or in a better position, let's say better position compared to condo sellers, because the detached homes demand remains strong. But condo owners may need to price aggressively to attract buyers, because we have seen we have more than 6.2 months of inventory in the condos, which is a high level of inventory. So if you're a condo seller, you need to adjust your expectations with the market. A strategic timing also would be a key, especially as interest rates most probably are going to fall in the mid 2025 or second half of the 2025. So as we move further into 2025, the market's trajectory will depend on borrowing costs, economic stability, and government policies. So those of you who stay informed and act strategically will find opportunities in this evolving real estate landscape.